Alrighty, folks, unless you are living under a rock, you will have missed the fact that mortgage rates shot higher, higher, higher. Mortgage rates popped from 7.1 to 7.34, according to Mortgage Business Daily. The housing market is officially over. It is cooked. No one can afford housing. It's done. Or could maybe higher rates be a good thing? Let's talk for the boys at Conway Home Loans. Jonathan and Dustin, how you guys doing? Who's starting us off? What's going on?
We're good. I mean, it's been a while since we've both been on together, so it's exciting.
Yeah.
Both in the studio.
And I noticed this belt in front of you guys. You got a championship belt right there. That's pretty awesome.
I know it has our picture on
24
it.
karat.
Yeah. That was a gift at the Las Vegas event for all the speakers. You guys were there, gave. So thank you for coming out.
I
And
heard you're
being
handing out houses next year, so we're waiting for that one.
well, unfortunately, Jonathan, rates went up, so the housing market's over. So I can't do that anymore. But talk about the move yesterday, because the move yesterday felt historic, but you guys are in the weeds. Maybe it wasn't.
Yeah, I mean, it was historic. Obviously, if unless you were living under a rock, inflation came, a lot. I wouldn't say a lot higher than expected, but the moves from the treasuries came a lot higher than people expected.
Yeah, it
Um,
did.
and yesterday, I don't know what it is right now. I think the 5 and the 10 are probably right at 4.6. I think we
Mhm.
closed at 4.58 or whatever yesterday, but
Right.
rates right now, and John and I have been saying this. If you go back to our videos in early December, before we even had the hoopla about 6 rate cuts in 2024, we
Yeah,
both sat here saying we'd be surprised if there were one or two.
you did.
Um,
You were right. Yep, you
and
were nailed it.
we think it's good long term. It hurts being John's paycheck, no other way to put it, in terms of the short term, business from lower rates and applications coming through. But long term, this is what we do believe is best, for the housing market. We can't continue, with higher demand than the supply allows. And we can't have, the continuation of properties, increasing in value 7-8%. We're never going to catch up. So to keep
No,
it,
yeah.
you know, uh, where we're at, I think is important, and not having any sort of, Fed rate cuts. Definitely not in June, definitely not in July. I shouldn't say definitely, but
Yeah.
looking like we may not have one
Unlikely.
until, yeah,
Likely.
maybe September. So that's my quick, spiel on what happened yesterday.
I put out the message the other day that rates above 7 was a good thing. And man, the amount of hate that I got. People people don't get it. Yes, I know in the moment for the next quarter, the next 2 quarters, it's going to be hard, if not impossible, to buy a home. I get it. But in order for the housing market to heal, we need more inventory. Is that a fair base assumption? We need more active listings, guys. What do you think, Jonathan?
Yeah, absolutely. And obviously, everyone's one-sided, right? There's no one that sees both sides. And you and I think we all talk from both sides, right? Because we
Yeah.
are both on the purchasing and then also on the side where we're actually issuing the loans and buying real estate and selling
Mhm.
it. So people don't understand that if rates drop like they want it to, right? And we talk about this all the time, prices are
Yeah.
going to skyrocket, and then they're going to complain about the fact that they can't afford houses because the prices went up. So it's the same issue that we're going round and round and round again. So in order for that to be corrected, rates have to stay like they're doing right now. And inventory, people have to actually come to the realization that it's time to sell, or they want to sell,
Yep.
and they want to sell at a fair price, right? Because obviously they made a bunch of money over the last 3 years.
Mhm.
So they want to sell at a fair price now and move on, whether it's upgrading or downgrading, right? So
Yep.
that has to happen in order for, I think, the market to slow down, and for people to stop overbidding on properties and trying to beat each other out by a couple bucks, because that only push pressure on the prices to go up, and that makes really difficult for people to buy. That's harder to buy than higher rates, actually. Higher prices are harder.
No, I mean, at the end of the day, I don't think anybody would disagree that we want a normal housing market. I mean, that's a statement that I think everybody can get behind. But unfortunately, the haters just don't understand how we get back to normal. How do we get back to normal? We need a million. probably 1 to 1.2 active listings on the market. Today, we're at about 560. So we need to double active listings. The only way you get there is to squash demand because supply is not coming in any great numbers. It comes in trickles and drabs and all of that. So unfortunately, just given how supply and demand works, you need to kill demand. In order to kill demand, you have to have higher rates. So I think rates above 7 will absolutely slow down the housing market. But unfortunately, it's going to take months and months of months and months for inventory to build to a level where we could hope for a normal housing market. And man, you say stuff like that, you get a lot of hate.
Yeah. Keep in mind, I mean, this is for all the listeners and people that are educated in the field. Like, this isn't crazy, right? Rates are up, but it's still lower than where we were back in like last year, October, right? So it's like rates are high, but it's not that high, right? And if deals are working and you're doing the work, right? You were underwriting at like 8% instead of what it was 6.7 or 6.5, you're solid still, right?
Yeah.
Because the rates are still below 8. And that's kind of what I guess we'll segue into the next point is
one sec. So
yeah,
it's really funny. So I'm putting out the vibe that I want rates above 7. I want the housing market to heal. I want to help the poor and middle class long term, not just in the moment. But boy, when I say this next thing, the knives come out. What I say is in the next sentence is what's going to happen as stuff stacks up on the market. Folks like you and I who are investors, guess what? We're going to find motivated sellers that have non-perfect properties. We're going to underwrite it 8, 9, or 10% interest. They're going to cash flow the day we buy them. People don't get it. I mean, it's like they think I'm criminal or something. It's wild.
No, and I'm gonna take a wild guess here. I don't know, like what sort of DMs or hate that you may have been getting, and I think a lot of it may be coming from your average consumer, and there's no hate being shed here, but the maybe middle class, first time home buyer / investor, right? That's hating on the fact that you want to keep rates high for them as if it's a thing that you're trying to do to spite them, right? But they don't realize that with the lower the rates, the people that are going to get more rich are the rich, right? You lower the rates even lower than 7 or 6, 6.5. Well, guess what? Their buying power is a lot stronger than yours is right now. So you actually do want to keep rates above. I know it may hurt at this time because of the monthly payment and the affordability, but competition wise, like lower rates actually help the rich more than the middle class.
Well, that's really a great point because if I was talking my book, I would want rates to go down. It would take my net worth. I mean, just think about it. You own 25 million bucks in property, just picking a number. Rates go down, values go up 10%. Thank you for the $2.5 million. I didn't have to do anything in this example. Right? But I understand it. I get it. But I've been through a real estate crash. I saw properties in Fresno, California go up 30% in 2004, 30% in 2005, then get absolutely crazy 2006 and 7. Fresno crashed 75%. What I see in front of me and why I'm trying to protect the poor and middle class is if we had rates fall to 5%, we would have another year of double-digit price gains. We would have more and more first-time homebuyers do unwise financial things, 40% of income, 45%, take out of arms, do whatever they can. And then in the next recession, they lose their home. That's what I'm trying to stop. I'm trying to stop the colossal real estate bubble from forming. And thus, if it doesn't form, it doesn't explode. That's where my head's at.
I think you nailed it right on the head.
Yeah. But let's talk about rates. Because again, we already talked about conventional rates having a crazy move yesterday. But that just means the flexibility and things that Convoy Home Loans offers. There's actually a cheaper route, at least as of today. Today's what, the 11th of April. DSCR loans are cheaper than conventional. What the heck is going on?
Yeah, I mean, those, like we always talk about, non-QM is always forward-looking a bit, right? So for a period of time, they were at par or slightly higher than conventional options in most, like maybe I want to say 40%, like maybe 70% of it. Now it's the other way. 70% of options now today, DSCR is better than conventional. Just literally based on the fact that the non-QM market hasn't moved or moved as much in a reactive standpoint than conventional rates have. I think there's a little bit of a watch and see what happens reaction on the non-QM market, because those are traded on, you know, treasuries and bonds and whatnot. So following that, I mean, there's trying to see, we've seen this in the past, right? And I think the non-QM market learned a lot from 2 years ago when rates jumped first from like 3 to 4%, right? Where a lot of people started losing their butts on the line with, you know, money on the table and couldn't walk away with anything. So now they're not as reactive. They're a little more forward hedging. And that's kind of the situation we're in right now, where DSCR non-QM in general is just right now, I think this morning, cheaper, which is crazy.
Yeah, I think it's crazy, but it's also an opportunity for investors who understand that there are two markets, conventional and non-QM. It's wonderful having Convoy on the channel each week because you do provide both and you could look at them, and sometimes it's conventional, sometimes it's non-QM. But yeah, after yesterday's wild move in conventional, it didn't shock me that DSCR is cheaper today. That's not shocking.
Yeah, and I think it'll continue to be this way potentially for at least this week. Just because conventional is going to keep doing what it's doing. And I think non-QM, they're just going to see a little longer what happened. But yesterday we did get a notice from our funds, basically like, hey, you know, rates might be going up in the next 24, 48 hours. Like that's what our secondary market is telling us. So go ahead and lock anything you can. So that's essentially what we did on behalf of our clients, because we had to secure. I mean, it's better to secure it rather than lose it, right? Because the only way that it can really go is up. So we'd rather protect our clients in their best interest, but that's kind of like what we have to do, right? If we need to pivot and do all that, that's the necessary function that's happening right now in this market, because it's not a one size fits all. We say that all the time, right? There's not one answer to every single question that you have to ask, right? So we're kind of being as fluid as possible, being a chameleon with the market and trying to address the needs in the middle of it, while trying to mitigate, hey, what about conventional? What about this? Like we're trying to keep everyone focused on the right path.
Yeah. I think, you know, the reality is you only can deal with the market that's in front of us. I think, you know, we've been doing this show for well over 2 years now, if not 3 years. And I think there's something that we have receipts. We have past videos on. Higher rates slow down the housing market. Probably is not surprising, but we have receipts. But that slower housing markets are good if you're willing to understand that you can write offers below asking, you can find the motivated sellers. And again, I usually speak to investors when I say that, but gosh darn it, even homeowners. If you're willing to do the work, you're willing to look at listings that are 30 days on the market. They're not perfect. You can use higher rates to your benefit. Folks, I don't know what to tell you. You want less competition. Less competition is good. Less competition means you can negotiate harder. The last thing you want is lower rates and everybody has purchasing power. That is a stupid thing to ask for. If you want to get the best deal for you and your family on an investment or your first time home, trust me when I say you want less competition. It's going to take work. It's going to take lots of offers. It's going to take working with professionals like Convoy to get you the right package. But look at this as a good thing, not a bad thing. Closing thoughts?
Yeah, and also, like, I think this is where brokers are really more powerful than banks, right? Where we can pivot, right? We have the power of pivoting. And we tell our clients a lot of times, like, hey, we can start with this lender, but if something like at least we're locked in. If something happens and we need to move and the rates come down or whatnot, then we can always do that too, right? So I think the power of pivoting in a market that's kind of tumultuous like it is today is crucial to, I think, an investor's success.
I love that. Guys, if somebody want to reach out to you, and they should, how should they do that?
Go to convoyhomeloans.com and let us know you came from where at.
Yeah, folks, you got to tell me you came from ORAT. Dustin and Jonathan have made me a commitment and stuck to it. If you come from ORAT, they will help you. They will communicate with you. And if you don't, you're going to end up in a queue. Then you don't want to be in the queue. Thanks, guys. Take care.
Thank you.
Thank you.